Welcome to the Christian parent investing journey as we develop talents for purposes in life. I have to share this. I can't agree more with Dillon Loomis, an excellent host of the channel called Electrified, about Chamath. Let's take a listen.
So no, Chamath selling his Tesla stock is not a problem for Tesla stock, and it is not a problem for Tesla the company. However, it is a big problem for his own credibility and for how some of these billionaires are choosing to operate. Let me explain. So here we have a video from January 7th, 2021. Chamath is talking about Tesla and Tesla stock, so let's have a listen to see what he had to say.
And I'm telling you right now, Scott, the big disruption that's coming is to power utilities. There are trillions of dollars of bonds, of capex, of value sitting inside the energy generation infrastructure of the world that is going to go upside down. And when that goes pear-shaped, Tesla will double and triple again. And I think, I tweeted this a while ago that I thought the world's first trillionaire would be a person fighting climate change. It very well could be Elon, but if it's not him, it'll be somebody like him, but it'll be because of this. Delivering clean energy, allowing the world to be sustainable is an incredibly important thing that will be rewarded by markets and individuals.
And you're just going to ride, you said 2 or 3 times higher than where it is now. You're just going to ride that wave?
Scott, I don't understand why people are so focused on selling things that work. Let's just, I'll make up a number. Let's just say I owned $1 billion of Tesla stock. If I sold it, now I have $1 billion problem. What do I do with that money? What about if it was 100 million? What about if it was just 10,000? 10 billion? It doesn't matter what the number is. The point is that when things are working, you're paid to stay with people that know what they're doing. And this is a guy who has consistently been one of the most important entrepreneurs in the world. And so why bet against him? It's the same thing with Bezos. Why bet against him? And there are a handful of other people. Anthony Noto, who we just talked to today, is yet another person. You get behind these people who have incredibly strong character, who know what they're doing, who aren't going to bend to short-term profits, and who are just going to drive the train for 10 or 20 years and make the world a better place. Get behind them. The best way to summarize this, by the way, is a friend of ours who we mentioned earlier, Bill Gurley, has this great phrase: when the music's on, you got to dance. And so these guys are dancing. They are in rhythm. They're in flow. Let them do their thing. Get behind them. Don't sell a share. Just let them create value.
So for some context, on the day of that Chamath interview, January 7th, 2021, Tesla stock opened at $777 a share and closed at $816. So let's just say $800 a share for simple math. Chamath said that Tesla would double or triple from that price, which would take us to, you guessed it, $2,400 per share. And what did he say at the end of that interview? Don't sell a share. Well, fast forward to today and let's hear what Chamath has to say. Here we have a new Chamath interview, September 29th, 2021, which was Wednesday of this week. Let's hear what he had to say now.
You still have a sizable stock position in Tesla?
No.
You sold it?
Yeah.
When?
Over the last few years, we've sort of, not last few years, like really in the last year or so particularly, the prices allowed me to, again.
I'm surprised to hear you say that after what you just said about the company.
Well, I don't have an infinite pool of capital. I'm myself, I don't raise funds, I can't go to other people. And so when I have these ideas, the money has to come from someplace. The only other solution would be for me to get totally levered up. And I'm just not comfortable with that risk. And so, I'm a meager guy with meager means.
Yeah, right.
So there you have it. Over the past year, which would go back to September 29th of 2020, Chamath has been selling Tesla stock, while during that time period, he was literally on air saying, do not sell a share, trying to hold up the Tesla stock price while in the background, he is busy selling his shares. So if you ask me, yes, this is actually a problem for Chamath and for his credibility, and as I said, for how these billionaires operate, using their media influence and their social media presence to say one thing while in the background doing another. Now, the silver lining here is that actually not selling a single share and listening to what Chamath actually said is the right move for probably 99% of regular everyday investors. Buying and holding Tesla stock over the next 10 to 20 years is a great move for most people. It is a high upside stock with a very safe floor, in my humble opinion, not financial advice, but what I believe to be the truth. And it's this type of behavior by Chamath that is not acceptable and should be called out. Now look, I know some of you are saying, well, maybe there was just a better opportunity, because that is exactly what he said. He needed some capital to invest elsewhere. That alone is not a problem, but lying about your actions and telling the public to do one thing, don't sell a share, while behind the scenes he is selling shares secretly, that is the part that is not okay. It's that duplicitous nature that has such a scammy, sleazy, I'm only about myself type of feel that I really do not support.
First of all, if you are interested in Tesla as a company or as an investment, or in Elon Musk as a CEO or as an innovator for sustainable energy, Dillon's channel Electrified will be a great source, at least for me for the past year or so. You can find a link to Dillon's channel below. So, as you've heard from Dillon, Chamath inevitably has to show himself eventually. In August, Bloomberg Quicktake had a good summary about Chamath, the SPAC king, and more importantly, his mistakes, if the word can make it sound less intentional.
One of the biggest advantage for a company to go public through a SPAC is that they can market forward-looking projections, which really benefits the company that don't have any revenue at this very point that they want to go public. So Chamath has really become like the poster of the SPAC boom.
Given the fact that Virgin Galactic now just directly listed on the exchange through Social Capital's SPAC, do you see this as a model that other companies are going to adopt?
I do, and I hope that this is a really good litmus test and a case study.
He was the person that kind of started this whole frenzy in 2019 when he took Virgin Galactic public.
I think that we found the absolute best company, something that'll thrive in the public markets, and frankly, something that's going to capture an enormous amount of consumer interest, giving the average person a chance to own a bit of space.
One of his things is every time he does a deal, he publishes his rationale behind making this investment. And people really love it. And I think as a result, it really brought people's attention that this is not your very complicated financial engineering, but it's an instrument that your mom and pop investors could participate.
Investors were so eager to get a piece of Chamath's deal that even before his SPACs would announce a target, when they were just piles of money, people were paying $15 a share. So you're essentially paying $15 for a $10 bill with the hopes that Chamath is going to buy something so great that you'll make up that deficit later. Now it seems like practically every underemployed rich guy with some name recognition has his own SPAC. There are SPACs advised by retired athletes like Alex Rodriguez or Shaquille O'Neal, and SPACs advised by washed up politicians like Paul Ryan or John Delaney. Researched each of the companies that Polyhapitiya had taken public. One that really caught my attention was Clover Health.
We are really excited after months of diligence and work to announce a merger between IPOC and Clover Health to take Clover Health public.
He talked up this company like it was a tech company that was about to change healthcare.
Clover is already growing 2 to 3 times faster than their next 9 nearest competitors. What that's created is a business that last year alone did almost $460 million of revenue, and in 2023 will do $1.7 billion of revenue.
Chamath always tweets a one-page thesis about why you should buy whatever stock he's pitching. And in the one for Clover, he said the company had 41,000 members now, but would have 273,000 next year. So I decided to dig in a little bit. Clover had actually been around for almost a decade when the merger with Chamath's SPAC was announced. And it's lost money the whole time. It's missed its growth targets. It was clear that this was really a smallish insurance company that almost exclusively sold Medicare Advantage plans to older people in New Jersey. They were losing a couple $100 million a year. The company is saying that it's put all that behind it because it's developed a new technology that's the culmination of all its research. And this technology is called Clover Assistant.
The Clover Assistant is a web application, and a physician uses it every visit that they have with one of our members.
Clover says that this technology will enable all doctors to offer better care, but I spoke to several former employees of Clover, and they said that the rollout was rockier than the company had presented it. And they said that many doctors who are signed up to use this technology don't actually use it themselves. And when you look at Clover's financial results, the type of stuff that you'd be forced to rely on in a traditional IPO instead of a SPAC, you see that every quarter the company is spending more money than it makes. For a while, it seemed like everything he touched turned to gold. And if you had bought blindly into all of his deals, you would have made a lot of money. But sentiment changed. In February, a short seller published a report that shocked Clover investors. It was from a group called Hindenburg Research, and it's really run by a guy named Nate Anderson out of his apartment in Manhattan. Anderson called out Chamath, and he said that Chamath had misled investors. Clover wasn't really a tech company, and that in fact, doctors didn't like using its software. Anderson's report proved to be pretty well timed. The market for SPACs peaked around February, and from February to March, average SPAC dropped about 17%. And polyhapitiya SPACs, which had climbed higher, also dropped further. In Virgin Galactic, his first SPAC, he sold $300 million worth of stock, more than enough to cover what he put in. And on Clover Health, about doubled his money, despite the stock dropping quite a bit since he announced the deal.
I think that SPACs are very much here to stay. Back in the, using the language of inequality, it evens the playing field. It democratizes access to high growth companies.
Since that initial slide, some of Chamath's SPACs have recovered a bit, but most investors who bought in early in the year when the bubble was inflating are still way underwater. Chamath didn't respond to a request to be interviewed for this video.
I encourage you to watch the full Quicktake video, which I've put the link in the comments section. Retail investors have certain advantages over institutional fund managers, but we are also very vulnerable towards those so-called guru or king who may or may not have retail investors' interest in mind. And even with the benefit of a doubt, they can unintentionally mislead retail investors if we got biased by media with soundbite success stories. Therefore, as retail investors, we need to do our homework to avoid these common mistakes. I'm creating a series on investing mistakes. Please subscribe if you want to avoid common investing mistakes as retail investors. If you find this useful, please think of someone to share this with. Hope that this channel can be a blessing to them. And I will see you in the next episode. May we pray for wisdom along our investment journey. Have a joyful day.